You might be wondering if Simple Practice integrates with QuickBooks. So you're using both of them already, and you're not sure if you should be transferring the data, the billing data from Simple Practice to QuickBooks, or if it's even possible. So in this video, we're going to go ahead and talk about this. If you're new here, my name is Jeanette Andrada. I am a tax strategist that specializes in taxes and bookkeeping for therapists in private practice. I help my clients just feel confident about their financials on top of paying the least amount of money in taxes. So let's go ahead and dive in and talk about the Simple Practice and the QuickBooks integration. The first thing I want to talk about is that QuickBooks is not HIPAA compliant. You should not duplicate any data from QuickBooks to Simple Practice. QuickBooks does not need to be HIPAA compliant. It's an accounting software. So you want to make sure to always do your billing in EHR. Do not try to create invoices in QuickBooks, and at the same time, do not try to transfer over any patient identifying information. So that's the first thing we want to talk about in case you don't already know, because I know how important HIPAA is in the medical field, and you want to make sure to be compliant. Now, let's get to the actual integration with QuickBooks. The quick answer is no, it does not integrate with QuickBooks. That kind of leaves you in this position of like, okay, like it doesn't integrate, but what do I do? I mean, do I need to combine the information? Do I need to find a way to add all of that and exclude, PHI data? Well, I've seen this handled differently. I have seen some therapists that, and even some other accountants and bookkeepers that will try manually doing it. I actually tried this when I first started because I did not know any better. And that was just the worst idea in the world. Simple Practice first does not have the best reports, right? You would need reports to transfer any of the data. And then you would need to go create journal entries in your accounting system. The reports are not great for accounting purposes. I personally do not like them at all because they don't seem to give me all the information I need in one spot. Let's say we try to do that anyway. We're going to use those reports and we're going to add the billing information into QuickBooks. The way that would be handled is you would add it to accounts receivable. If you're not familiar with the term, accounts receivable is just money that's owed to you but it has not been paid to you. So it's when you send an invoice, now you're waiting for somebody to pay you. Well, what happens is that if you take insurance, we're not accounting for any of the write-offs. And sometimes you don't even know that you're going to get, like, how much you're going to get written off, at what point. And Simple Practice doesn't have a really great way of like just showing you all the write-offs in one spot. What ends up happening is that you're having to clean up accounts receivable for months and months and months. You know what? That's going to take you hours, like hours, not even per month, per week. Even if you did it that often, especially if you have a high volume of sessions and you take insurance for everybody, it is a total nightmare. I would not recommend this at all. So you might be wondering, how do I add that information, right, from Simple Practice? Well, the great thing is that you are more than likely going to be a cash basis taxpayer. So what is cash basis? Cash basis is when you report your income based off of the cash receipts. So you're not reporting your income as it is earned the way that it shows up in Simple Practice, right? Simple Practice will show you that you had a session for $125, but the insurance is only going to pay you $80, right? So the difference is you're never going to receive that money. Well, whenever you are looking at it from income earned, then you would be paying the taxes, or you would be recognizing $125 worth of income. You are a cash basis taxpayer, so you don't have to recognize the $125. You would recognize the $80 cash that you actually received from the insurance company. So that's a really great thing, that you're a cash basis taxpayer, and you want to just keep it simple. Just simply record your deposits to track your income. You don't need Simple Practice. You need your bank statement in order to track your income. You have to keep in mind that QuickBooks is a summary of your income, and Simple Practice is your data source. So if you go to Simple Practice, you could find the details of everything, whereas QuickBooks is going to give you just a summary of the total income that you received for the year. Long story short, Simple Practice does not integrate with QuickBooks. I actually think that's a good thing because it would just cause you so many headaches. And you could also risk violating HIPAA laws if you're not really sure exactly what you're doing. So just not having that integration, in my opinion, is probably the best thing. As I had mentioned earlier, you want to make sure to always do your billing within your EHR, and that way you're keeping everything separate and safe, and also you're keeping your QuickBooks clean so you don't have to spend hours on using QuickBooks or pay somebody to clean up a mess of trying to add accounts receivable into your QuickBooks file. Was this helpful? I really hope it was. If you have any questions, please let me know. I do have resources available for therapists. They're completely free, so just make sure to check out the link in my description and go download some free resources. All right, guys, I'll talk to you next time.